Today, Bitcoin prices hold below the $17,000 mark. Elizabeth Warren wants Silvergate Bank to explain its ties to FTX. And Bruce Rodgers of LM Funding America reveals how a U.S. digital dollar could spur Wall Street adoption of crypto. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto prices trading mixed once again today. As of noon Eastern, Bitcoin prices rose 0.33%, but still remained below the $17,000 threshold. Meantime, Ether slid slightly, trading around $1,200, and the Matic token rose by 0.5%. All right, now on to our top stories. First up, Senator Elizabeth Warren is demanding answers from Silvergate Bank about its ties to FTX. Now, Silvergate is one of the few banks in the U.S. that allowed customers to move dollars onto crypto exchanges. Yesterday, Warren and two Republican senators sent Silvergate and its chief executive this letter requesting information about the bank's relationship with FTX. Now, the letter also questioned Silvergate's vigilance in flagging suspicious activities in client accounts, which is required according to banking regulations. According to a recent FTX bankruptcy filing, FTX and its sister hedge fund Alameda Research held 20 different Silvergate accounts. According to a lawsuit filed against SBF and his top execs, billions of dollars in wire transfers moved through Silvergate to FTX in recent years. In a statement, Warren said, quote, Silvergate appears to be at the center of the improper transfer of billions in FTX customer funds. Now, responding to the letter, Silvergate told NBC News in part, quote, like many others, Silvergate was the victim of FTX's and Alameda Research's apparent misuse of customer assets and other lapses of judgment, and we believe our full cooperation will help set the record straight about our role in the digital asset ecosystem. Next, SBF could face years in prison over FTX's $32 billion collapse. But that's if the U.S. ever gets around to arresting him. The founder of the bankrupt crypto exchange is already under investigation by several agencies, including the SEC and Department of Justice. However, it will take months, if not years, to get all the evidence together. Legal experts tell CNBC that SBF could face a host of potential charges, both civil and criminal, as well as private lawsuits from millions of FTX creditors. Renato Mariotti, a former federal prosecutor and trial attorney who has represented clients in derivative-related claims and securities class action cases, says it looks like there's a chargeable fraud case here. He added that if he was representing SBF, he would tell him that he should be, quote, very concerned about prison time. SBF did not respond to CNBC's request for comment, but during a one-hour interview at the New York Times' DealBook Summit last week, he didn't seem concerned with his personal legal exposure, saying he's not focusing on that at the moment. During the interview, SBF also said he didn't knowingly commingle funds and denied committing fraud. Last, Bitcoin mining difficulty has dropped by the most in more than a year as the so-called crypto winter cuts into profits. For the past few months, Bitcoin miners have been dealing with rising electricity costs and the lower price of Bitcoin, which hits their revenue. Data from mining pool BTC.com shows that the difficulty of mining a Bitcoin block dropped by more than 7%, with miners turning off machines as the bear market hits profits. The adjustment at block height of around 766,000 is the biggest downward change since July 2021, the data reveals. Now, you might remember, in July of last year, many miners dropped off the network after China's ban on the industry. CoinDesk is reporting that major producers, including Argo Blockchain and Core Scientific, are dealing with liquidity issues. Compute North, which provides hosting services and infrastructure for crypto mining, filed for bankruptcy 3 months ago. All right, on to our main story. Sticking with Bitcoin mining, Crypto World's Jordan Smith spoke with Bruce Rodgers, CEO of mining firm LM Funding America, about lessons learned for the industry following FTX's collapse and how regulation could prevent future scandals.
All right, so I want to kick off with FTX and Sam Bankman-Fried. I mean, he's been pretty outspoken in regards to what he claims to know about FTX's collapse. And he claimed he didn't intend to defraud anyone, but given your background, your legal background, what's your reaction to what we're learning about FTX and Sam Bankman-Fried? And do you think he should even be speaking right now?
I look at every business the same. You try to get to that aha moment when two people met and they scribbled something out on a napkin and they slid it across, and that was the idea. And I'd really like to meet Sam Bankman-Fried's parents, who are both securities lawyers teaching at Stanford, and try to figure out what the overall plan here was. I mean, they started off trading, arbitraging time zones, pretty simple play, really. And then they got big and they said, what would be more fun is to trade with other people. And so they had these two entities. And of course, anytime you have two entities, and malfeasance can happen. And then the other people I want to talk to are the people that invested hundreds of millions of dollars in this company, and their due diligence wasn't alarmed by the fact that they didn't even have their own bank account. They were sending customer funds to Alameda and back and forth. And they weren't alarmed by these audits. And in my prior life as a transactional lawyer, I suspect this happened because the decision was made at a very high C-suite level, and then the due diligence becomes making the guy in C-suite correct in his decision, and you sort of skip some of the steps along the way.
I'm looking out ahead as to where the crypto industry evolves from here, where we go next. And we've seen some pretty big scandals this year. We're talking stunning collapses, whether it's Terra or FTX or Three Arrows Capital. What are your sort of takeaways for the industry looking back on these events? Is there a lesson about due diligence and that there needs to be more of it done when putting faith in these companies? Is it about customers being more scrupulous when it comes to where they're putting their money? What are the lessons here?
Oh, there's a lot of lessons here. So you set up these exchanges and they accept money from other people and they trade back and forth. And they all have, in blockchain contracts in general, all have to have a digital medium of exchange in order to reconcile the transaction. And all of these attempts to create that digital medium exchange all have the same fundamental flaw in that you can have bank runs, just like we had bank runs 100 years ago, and even less than 100 years ago. We need to have a U.S. digital currency. And if you had a U.S. digital currency, then all blockchain contracts would default to transferring this USDC back and forth. And the reason you have to have a USDC and not a Terra or a Luna or a Dogecoin is that only a sovereign can continue to print money and ensure the liquidity of that digital currency.
So let's talk about government oversight of the crypto industry. And you mentioned a U.S. digital dollar, obviously something that the Federal Reserve is looking into. But, we're about a month out from a new Congress, and obviously there are growing calls for cryptocurrency regulation, be it stable coins or consumer protections. But how quickly do you see U.S. regulators or lawmakers taking on some of these new guidelines, and what sort of rules are most pressing in your mind? Is it stable coins? Or a digital dollar, as you're talking about, or is it more consumer protection?
I suppose the right answer is everybody should protect consumers first. And that is what our financial system's set up for. I happen to agree with Commissioner Gensler in that there's nothing in crypto that our current regulatory system isn't covering. The people we're trying to protect are the consumers out there, and our current financial laws endeavor to do that. And they can always be improved, and they will be improved, and they're always being improved. Crypto adds another element to that and requires some improvement. Probably the most dramatic area would be the minting of a U.S. digital coin, a stable coin that could interface between our current banking system and this crypto banking system. This is a lot like going from paper ledgers to digital ledgers. And there's a transition period. People will run parallel things just like we did in the paper file days versus the computer file days. But eventually, because of the expediency and the efficiency of dealing with risk and dealing with breaches of contract, eventually these digital contracts will become more and more and more of the economy. And that's just going to require adding on to our current regulatory system, and most notably in the form of a digital coin. But there's probably some other tweaks that, because blockchain keeps these super spectacularly accurate records, that we don't need to do certain things for. And there's other things, because we don't know exactly who owns this on the other side. Maybe we have to require that we do know who owns it on the other side. other side.
So I want to talk about Wall Street adoption and traditional finance adoption of crypto. Is it your belief that we'll see more crypto adoption from Wall Street players in 2023? Is there something that's going to motivate them beyond the scandals that are happening right now? Or do you think that it's something that we won't really see mass adoption in Wall Street spaces until we have a digital dollar?
Wall Street's adopting blockchain technology as we speak because it's such a great record keeper. We're going to have some advancement from FASB. Currently, the Bitcoin we hold on our balance sheet, we have to market downward with an impairment, but we can't mark it back up. So all other financial assets use the fair value test. So my Apple stock, we mark it to wherever Apple is at the end of the quarter. Sometimes it's down, sometimes it's up. But Bitcoin, we only mark it down. So FASB has to resolve that, and they're in the process to do that. Began last spring when President Biden announced that government was going to have to figure out Bitcoin and crypto. FASB jumped on this and started the research, and they've indicated that they're leaning towards going to treat Bitcoin like a other financial instrument and go to the fair value test. That's a big breakthrough. When that happens, then pension funds and the more riskier than pension funds can get in. When you see CalPERS take a position in Bitcoin, that means all of the regulatory issues have probably been pretty fleshed out. So that's where we are. We've got to we've got some rules we've got to change in order to make sense of the asset class. And then we've got some additional protections we've got to bring. We've got to bring the Wild West of this underneath the current regulatory system of our financial market.
Okay, that's all for Crypto World today, but we are back again tomorrow, and we will see you then.